Hi, everyone, and welcome to today's webinar. I'm Kat, the Senior Marketing Manager at BDI, and I'm going to kick off today and welcome Micah. I know a few people are still trickling in. So before we get started, I just wanted to draw your attention to the chat bar on the right-hand side of your screen. Go ahead, once you enter the room, introduce yourself in the chat, tell everyone your name and what organization you're part of. And also, if you have any questions already that you're curious for the webinar today. Micah will be doing a Q&A at the end. So if you do have any questions, you can enter them into the chat at any time and he'll address them at the end of his webinar. Before we get started, I have one shameless plug for BDI clients. We are launching a client-only Facebook group today. So if you're a client, make sure to check your email because you'll be receiving an invitation to the Facebook group. Okay, so let's get started. Our presenter today is BDI Senior Account Director and Strategist, Micah Mann. For more than 10 years, Micah has dedicated himself to raising funds for nonprofits, including rescue missions, World Vision, Young America's Foundation, and Christian Union. As the founder and executive director of Blood for Missions, he grew a team of 25 employees that together built the first licensed and FDA-regulated blood bank in California in 35 years. Blood for Missions served a network of over 100 Christian schools and churches, including 5 of the largest churches in America. But today, we're lucky to have Micah on our BDI staff, so I'll pass it off to him to introduce what he does at BDI. Welcome, Micah.
Thanks, Katrina. Hi, team. My name is Micah Mann. I'm a strategist and senior account director at BDI. BDI is a fundraising agency for nonprofit ministries and causes in Monrovia, California. A friend and BDI client, when he got the invitation for this webinar, he asked me, should I attend to find out if we've been doing what you told us to do? This is not that type of webinar. The research for this project came out of a deep desire at BDI to continually be learning from one another. And if you and I are only just meeting, a little bit about who I am and this whole presentation, the lens that you should view it through. I am under orders to maximize what God has given ministries and to myself. And if you have a similar conviction, whether you're a BDI client or not, a colleague, or even if you're with another fundraising agency, I say welcome, and I am your brother in Christ. The focus for our time today, we researched BDI nonprofit clients for a 5-year window, and we're highlighting the top nonprofit ministries that made significant revenue leaps. This research project, I was continually reminded of a favorite book, Good to Great by Jim Collins, and this presentation owes a great debt of gratitude to his work. While reading this book is not a prerequisite for this presentation, I am curious to see in the chat, we've got a quick poll. Have you read Good to Great before? When putting this presentation together, I fell in love all over again with this good man's approach, particularly his focus on honesty with each other about the brutal facts, the brutal fact that there is not a silver bullet, but rather there's a disciplined approach, consistently performed over time, producing little wins. And you'll see in this presentation and in our research, those little wins create opportunities for even more wins. The outcome for our time today is not another to-do list for you, although you will find actionable ideas. Rather, the outcome is a focused, disciplined direction for your ministry, a place to maximize your time and resources. We're going to look under the hood for what the top nonprofit ministries are consistently doing and these are all Jim Collins phrasing from good to great. We're going to look at first who, then what, building a foundation, leveraging your fundraising agency to create a foundational engine that generates consistent revenue. That's a flywheel principle. And then finding your hedgehog place where you as a fundraiser can be the best in the world at. This research is telling us a few things. First, your ministry does not have to be in New York City or in Los Angeles. I'm in Toledo, Ohio. 3 of the top 8 have market footprints of less than 400,000 households. That means that 3 of the top 8 are in areas similar to the size of, and these are not the cities, but Lexington, Kentucky, Wichita, Kansas. It's not a prerequisite that you need to have 35 years on the job at the ministry. The key decision makers changed in this window at 6 of the top 8 ministries. And one thing struck me over and over in this research: there's room to grow for every organization and person. Without fail, even the top 8 had areas they each could grow or add themselves. Please keep that in mind as we go through this info. I want to lightly touch on the methodology behind this research. Each spring, BDI creates a donor performance analysis for our clients. It's part of our partnership. It's a deep dive into each client's total giving, not just their work with BDI. The presentation uses this 5-year window. The benchmark that we'll be looking at is 49 nonprofit ministries, 47 of which are regional rescue missions, 2 are national and international ministries. We excluded gift in kind, government funding, enterprises such as thrift stores, and incomplete data. BDI has about 60 clients, some that are very new, and we did not include all of them in this research. There's 8 nonprofit ministries at the top. 7 are regional rescue missions, and they're all scattered across the U.S. There's 1 in the Midwest, 1 in the Heartland, 1 on the East Coast, 2 in the Pacific Northwest, 2 in California, and 1 is a national ministry. The inclusions are listed here. I wanted to call one thing out in particular. We consciously made a decision to include capital campaign gifts. Most of these capital campaigns were wrapped up before the final year of this research in 2021, and the majority were wrapped up even before 2020 COVID. That means that these ministries had already received these large capital campaign gifts, and then they were then fundraising on top of it. They were continuing to grow. That's pretty incredible. So our first commonality is 5 of the top 8 had capital campaigns where they clearly shared a need that their ministry was uniquely able to address. And Jim Collins might call those capital campaigns a type of BHAG. And look to the chat for a poll if you know what a BHAG is. Diving in, let's establish a benchmark so you can see how we selected the top 8. Overall revenue growth in this 5-year time period, the benchmark for BDI clients on average grew $1.4 million. The top 8 grew more than 3 times that, $4.5 million in the same time frame. This timing is interesting, isn't it? Many BDI clients experienced a COVID bump in the calendar years 2020 and 2021. But the top 8 went above and beyond a COVID bump. In a good to great saying, the best get high rates of return on luck events. We're going to dive a little bit more into the revenue. We looked at overall revenue. We'll look at individual revenue growth. The benchmark in the 5-year time grew $1.2 million. That accounted for the majority of their 1.4 overall average growth. The top 8 individual revenue growth grew $3.2 million in the same time frame. And Did you notice that the benchmark has an additional 200,000 in overall revenue growth, not from individuals? The top 8 had an additional 1.2. So the curiosity for us in this research, what's making up the average additional $1 million of growth of non-individual revenue in this time frame? And what's driving 2.5 times more of individual revenue growth? We'll start with the foundation. First, who, then what. The right people on the bus within your nonprofit. The right fundraising agency. And I want to briefly touch on this. A trusted agency should be able to create a mandatory Bible of your brand and use it to create print and digital appeals that independently generate consistent revenue and growing revenue. They're providing reporting on their work. They're always looking for low cost, high upside opportunities. And they're constantly trying to advise you on ways to save money, even occasionally at their detriment. That's true. You will get the most out of your agency if everyone remembers the agency works for you, not the other way around. And I'm going to speak facetiously for a second, but Katrina, turn off the recording. If you have an agency that you trust that is looking out for your ministry and cares even half as much as you do, remembering that you've dedicated your career and a lot of instances your life to your ministry and cause, even if that agency is not BDI, that is gold. Okay, Katrina, turn the recording back on. I mentioned 6 of the 8 decision makers were replaced in this 5-year window. They were replaced with experienced or highly capable people. Many of them had a development career. A few, one owned a successful agency. Another was a national VP at a company that we've heard of that ran Super Bowl ads. We're not going to spend a lot of time on those people. We're going to spend time on how to be the right person on the bus, because a lot of us are on the bus already. The very first thing is to be fanatical about fundraising. That's one commonality the top 8 had. Defend and execute the plan you're creating with your agency. When everyone else leaves, your agency, your vendors, you have to clearly articulate what must happen to your leadership, to your board, especially to your donors. And you need to be ready to repeat the plan as a mantra and stick with the plan. And you know all that already, but the tasks in your department are critical, and you need to sacredly protect your team's time. You might think that I'm not telling you anything you don't already know here, but this is much easier said than done. We must put fundraising efforts first from the development department. And of course, that's obvious, but it is sneakily very, very hard, particularly when an extra set of hands is always needed within a ministry. I'm going to give a silly example. Setting up tables and chairs at fundraising banquets. This looks good to others. It's very helpful. It can be a very expensive process for your ministry. And I'm a PK. I've set up some chairs in my life. But if you've got a small development department in a room of major donors, delegate the tables and chairs ahead of time. Donor and development colleague relationships are everything. Development colleague, replacing development staff, training them takes tremendous time and energy, and not to mention deviates from your plan. When you have the right people on the bus, proactively do everything you can to keep them on the bus. when I say being the right people on the bus, it does always mean always learning and growing. We'll talk in a little bit about like a flywheel principle about how each of us are, as we continually get better, even at the agency side, it's continually pushing this larger flywheel. One ministry that I work with, they're 12th on this list of 49. They're not in the top 8, but it's hilarious. In the last year, they've requested meetings on how to get better in 2 areas: legacy gifts and monthly donors. Here's why it's hilarious. They're already arguably number 1 or number 2 at BDI in those areas. Yet they're consistently striving to be the best, and those are areas that are important to them. They're really focusing on. And if you're a BDI client, be in regular contact with BDI Academy and their resources. It's included in our partnership. Shelly Spear is the Senior VP over BDI Academy. I talk with Shelly in the Academy at least twice a month myself. What they are seeing and hearing from other ministries, it's invaluable. Lastly, pray about everything. I have a verse for you as a fundraiser. Philippians 4:4-13. I particularly am fond of the Message version of this scripture, but read it and let it guide you. In it, it says, and just briefly, celebrate God all day, every day. Let everyone you meet know you are on their side. As we move from the first who now to the what, I want to give a word of caution here. Be careful to not pick and choose just what you like or feel comfortable with. We ought not to reject data just because we don't like what it implies. So much of this work is interconnected. If we as a fundraising agency see a $20,000 or $50,000 donation come in through direct mail, as much as we love what we do, we all have to know that is coming from a relationship and a deep place from your ministry. So much of this is interconnected. Yes, there are exceptions, but those exceptions to the rule are less. We don't need to do that, and more additional areas to grow. The flywheel principle is key in the good to great concept. We're going to get into some of the data, but I'm using this as a construct here. I'd like to paraphrase a little bit from good to great about the flywheel, because it's just a great image, and you'll begin to see throughout the presentation how these things are working together. But picture from good to great, picture a huge heavy flywheel, a massive metal disc mounted horizontally on an axle and weighing 5,000 pounds. And imagine that your task is to get the flywheel rotating on the axle as fast and long as possible. Pushing with great effort, you get it to complete one entire turn. You keep pushing, it moves faster, 2 turns, 3, 6, 7. You keep pushing, builds momentum, 50, 100 turns. Then at some point, a breakthrough. The momentum of the thing kicks in your favor, and its own heavy weight starts working for you. Each turn of the flywheel builds upon work done earlier, compounding your investment of effort. 1,000 times faster, then 10,000. The huge heavy disc flies forward with almost unstoppable momentum. And suppose someone came along and asked you, what was the one big push that caused this thing to go so fast? And you wouldn't be able to answer. It was all of them added together in an overall accumulation of effort. The flywheel principle coined by Jim Collins is that most companies are successful, slowly build momentum via a flywheel effect. They're consistently confronting the brutal truths and having faith that with discipline, continued effort and momentum, a breakthrough will happen. The opposite, we're not going to get into, but the opposite in the book is called the doom loop, where a lack of patience leads to continued cycles of new leaders, new ideas, new directions, new innovations, without ever waiting to see something through. We've adjusted the flywheel effect a little bit for fundraisers. The fundraisers flywheel principle is to delegate to your agency acquisition, cultivation, and digital so that your nonprofit can focus on your hedgehog concept, which is something we're going to spend sole time on looking at because of what the top 8 has done. We'll dive into the top 8 details for what these folks traditionally delegated to their agency. We're going to start with print acquisition. This is kind of fun. We don't really get to see these a lot at ministries, but it's fun to look at. The top 8 for print acquisition on average for the fall acquisition, the top 8 in this 5-year window for each year spent $376,000. The top spent nearly $650,000 on acquisition. The average rental list saturation rate was 21%. BDI recommends approximately 30% for the top saturation rate. So there's still room for these folks to grow more. The top 8 average a 5-year donor growth of 2,100 people. And this is worth adding. 6 of the 8 were in acquisition co-ops. These folks invested in digital acquisition and cultivation. It's kind of cool, isn't it, to see on average they're annually spending a little less than $100,000, a robust email list. Average digital growth over this 5-year window is $917,000. And their average digital revenue in 2021 was $1.4 million. That means that on average, they were starting in 2017 at about $500,000 a year. They're growing $900,000 in that time. The top number 1 on the list has over $3 million in digital revenue. They're maximizing their cultivation appeals. The top 8 average 21 appeals each year. These are a combination of printed appeals to existing donors, typically 0 to 24 months. Also, quarterly newsletters. 7 of the 8 mailed quarterly newsletters. The 8th didn't mail newsletters because we advised them not to. The top 8 market penetration averaged 3.5%. This will typically top out between 5 and 6% of your market footprint. If you're scoring at home and you want to calculate your own market penetration, divide your 0 to 24 month donors by your market footprint, the number of your households. There's something to this that I want to address, and that's there's always a couple of things that ministries hesitate. One is joining an acquisition co-op. So seeing that 6 of the 8 are in a co-op, I think is powerful. The other is mailing 21 appeals a year. A very common thing for my strategist colleagues and I to hear is we don't want to mail more. We don't want to mail this much. I wanted to just look at, after we've seen the top 8 are averaging a pretty healthy amount of cultivation appeals each year. I wanted to show the effect of adding a second print appeal on monthly revenue. This is something you can test yourself. When you're going through your budget season, pick a month and you're hesitant about adding an appeal, pick a month and add an appeal to that month. I work with a rescue mission without a major gift officer. That's the data you're seeing on the screen. The seasons included here, they also did not have any paid digital media in the market. It's a very unique environment that was like a pseudo vacuum, if you will, to see the year-over-year effect of adding a second appeal in the month of January. The top grouping compares 2020 and 2021. Direct attribution from the second appeal increased net revenue 84%, and it reasonably contributed to additional increases in both white mail and digital. Yes, this is pre and post COVID. But this is a pattern you'll continue to see as you push further. Higher highs and buffeted lows against environments like now. Enough about agency. Let's talk about you. And this cute hedgehog, good to great asks, are you a hedgehog or a fox? In his famous essay, The Hedgehog and the Fox, Isaiah Berlin divided the world into hedgehogs and foxes based on an ancient Greek parable. The fox knows many things, but the hedgehog knows one big thing. Those who built the good to great companies were, to one degree or another, hedgehogs. And this is something that was a common thing that we saw among the top 8. They used their hedgehog nature to drive forward on this one big thing. The concept of the hedgehog, and I'm paraphrasing for us as fundraisers, a fundraiser must have an understanding, not a goal, a strategy, or a plan, but an understanding of what they can be the best at. And this distinction is absolutely critical. The top 8 ministries focused on one big thing at the intersection of what are you deeply passionate about, what can you be the best in the world at, and what drives your economic engine. I believe that one big thing for our ministries to focus on is our middle major donor relationships. And I'd like to share an analogy. This is my boy. For some reason in this photo, I look like I'm on the lam. I don't know where that hat came from, but this is my all-time favorite photo of my son and I. I've been married 13 years. My wife, Ashley, and I have a little 4-year-old boy named Judah. I can be many things for Judah. A caretaker, a cook. Saturday morning breakfasts are my all-time specialty. A teacher, just to name a few. But there are other people that can do those jobs and often do them better than I can. His preschool teacher has made leaps and bounds with him. A 3-star restaurant makes a better breakfast than Dad does. But there is only one job in the world that I've been given that no one else can do, and that is to be his dad. This is what we've been given in our ministries that no one else can do. This is what you can be the best at. You can hire a fundraising agency for the behind the scenes, acquisition, cultivation, digital and fundraising emails. No one can replace the relationship you have with your middle and major donors. And your middle major donors wouldn't want that either. For lack of a better phrase, they want you to play catch. And if you're saying to yourself, of course, spend more time with your largest donors, you know this already. What our research is showing us is that you might not realize just how valuable your mid-major donors are and how that should be changing your approach to your ministry fundraising. We saw this slide before, individual revenue growth for the top 8. It's $3.2 million in this 5-year window. 89% of this $3.2 million came from donors giving $1,000 or more. Just anecdotally, nationally, about 5% of donors give $1,000 or more. This points back to acquisition and automating that with your agency. For every 1,000 donors you're acquiring, 5% on average are giving $1,000 or more. Let's look at the breakdown here. Consider that donors giving between $1,000 and $9,999 in a year. They grew in this 5-year window, $1.5 million for the top 8. We're going to call these middle donors. This middle donor growth alone in that 5-year window, if you'll remember, is more than the entire growth, overall growth for our benchmark that we saw. And just for some frame of reference, we'll reference this math in a little bit too, but the top 8 averaged 1,248 middle donors giving in this range each year. The major donors giving $10,000 or more increased $1.3 million. In fact, the larger increase of the two was actually middle donors giving less, between 1,000 and 9,999. That's fantastic positioning as those middle donors continue to grow into major donors. Again, with this sort of flywheel effect on fundraising. And for reference, the top 8 averaged 90 major donors giving $10,000 or more in a year. This is really where we start to see the interconnectedness among the top 8. As donors are acquired and reactivated in an automated process by your agency, they flow into the database. The top 8 has qualified and cherry-picked the best for their special treatment. This is where we do the math. The ministries from these top 8s are focusing in a very hedgehog concept focus on middle major donors. And the math, on average, the top 8 had 1,338 donors giving $1,000 or more. So it's a flywheel within a flywheel as this continues. We've got just a couple more slides before we get to question and answers. But if you're asking, so you're saying we should hire a major donor, a major gift officer? Is that what you're saying? No. I'm saying in the next 3 to 5 years, you should be hiring multiple major gift officers. 7 of the top 8 in this study had at least one full-time major gift officer. 6 of the top 8 in this window increased their number of major gift officers, and they're averaging each 2 major gift officers each. This is a good time for me to remind you that BDI is not selling major gift officers. This is not really, this is what we're seeing from the data. This is what we're seeing, folks taking these $1,000 plus donors and raising them even more by adding more and more major gift officers. In particular, in calendar year 2021, 4 of the top 8 had between 3 and 5 full-time major gift officers. And just one thing I thought was interesting, 2 specifically hired corporate giving officers. 1 hired a dedicated planned giving officer. And then they gave these major gift officers tools, in particular matching campaigns. 6 of the top 8 had matching campaigns in calendar year 2021. And just for reference, BDI recommends matching campaigns in May, Giving Tuesday, and year end. And you'll see here 11 of the top 15 had at least 2 matching campaigns, and 5 of the top 15 had 3 matching campaigns. Lastly, this is the number one reason to fanatically focus on your middle major donors. If you are only asking for cash, you are asking small. There is significant growth among mid-major donors because wealth is predominantly in non-cash assets. 90% of the US households' wealth is held in non-cash assets. At this point, most ministries receive non-cash gifts passively, a legacy gift, a windfall to offset taxes. Yeah, but I don't know how to ask for non-cash gifts. You're already receiving these gifts. If you've received donor advised fund donations, a large portion of this is from non-cash gifts. Certainly it appears to you in a check it's cash already, but per Schwab Charitable, 60% of the contributions to their donor advised fund in the last year were non-cash assets. Real estate, stocks, cryptocurrency. Here's the wild part. The top 8 is not asking for non-cash gifts. You're not, they're not. Their major gift relationships with the donor was the sole driver in our 5-year window of this middle and major donor revenue. This is the next leap. We're talking about tremendous opportunity, not just from what we're seeing in the top 8 and leveraging major gift officers, but another level on top of that to come, where in 5 or 10 years, we're asking ourselves, what are these top 8 doing? Those major gift officers are developing their skills more. They're moving from relationship to trusted advisor themselves. There is an awesome case study on this. A professor at Texas Tech researched about 1 million Form 990s from 206,000 nonprofits from 2010 to 2015. It is an awesome presentation. It's in the resource slide at the end of this deck. The study conclusion: shifting to gifts of non-cash assets drives total fundraising growth in every nonprofit sector, at every size, in every time period, the same year, 3 years, and 5 years later. And just one thing that I thought was interesting, 3 predictors of non-cash assets were age 65 plus, high income, and high education. Demographics did not factor. And we didn't forget, we had that curiosity earlier. What's driving that additional $1 million plus in non-individual revenue growth for the top 8? There's a variety here, but overwhelmingly the top 2 were donor advised fund and estate gifts, both of which contain a lot of non-cash gifts. If you notice anything here, there's at least 4 of these 6 can be tied back to an individual. Donor advised funds and IRAs, legacy estate gifts, events, tax credits. Another reason to focus all internal efforts on middle major donors. The last slide before we summarize. Knowing this, our middle major donors become a flywheel themselves. We're starting with relationships, doing what they do best, knowing the top 8 did the same thing. They're not doing an advanced ask just yet. You're progressively adding and sticking to major gift officers. I think it would be difficult to add multiple in 1 year. This is probably a plan for 3 to 5 years. And then gradually moving from asking to advising as these folks develop their own skills. Major gift officers with dedicated donor relationships are leading to donors giving more cash gifts. Donors give then from their donor advised fund and from their corporate giving. And then when a donor passes away, legacy estate gifts. And this is a very true donor-centeredness approach that is actually really beautiful and a way to get even closer to your donor and know them even more. To summarize, first who, then what. We're looking for a trusted agency and major gift officers. Give your agency their marching orders to handle maximized acquisition, cultivation, and digital. Make investments in acquisition, 21 appeals or more a year in digital. This is generating a consistent source of income that frees you up to pour your internal time and energy into about 500 to 2,000 middle major donors. Before we get to question and answers, there's one more thing I want to say. Our donors want to know and be known by the one true God. And you are an emissary of our Lord. Now is a time for question and answers.
Okay, thanks, Micah. That was great. I got a couple questions on the side, and I know we're over time. So if you sent me questions ahead of the webinar, we will get back to you over email. But does anybody have any questions for Micah right now? Okay, so If you do have questions, just feel free to reach out to us, reach out to Micah, and if you submitted questions beforehand, which we did get a few, then we'll email you Micah's answer because we are over time. So thank you, Micah. This was great, and thank you everybody for attending.
Thank you for coming.
All right, bye.